So what's going on, guys? Welcome back to my YouTube channel. It's your boy again here, Michelle, aka the Tiger 10. Today I'm just going to be showing you an update on that position which I took on USDJPY, which was on Monday, and I closed it yesterday, Tuesday. And also the positions that I'm currently open right now, I opened them today, which is Wednesday. So without wasting much of our time, guys, let's dive straight into the charts. So diving straight into the charts, guys, let's first look at our position which I took on Monday, right? So the day before yesterday, which was Monday, I took this position here, right? I was a bit impatient here, I admit, because I took a trade, right, when the entry was not yet confirmed, thereby having a larger stop loss. When if you wait for a confirmation, you can have a tighter stop loss. So instead, when I took this position, my risk to reward was 1 to 2, but in the community, I gave them the trade which had a risk to reward which was 1 to 3, which was fine with them because it hit their take profit. Uh, the trade was taken right on Monday, right, at around half 3, and they got there because I told them a buy limit order, right, at this psychological level. And when they bought, the take profit was hit. So their trades were executed Tuesday in the morning at around 7, 8, right? If we put the time frame in the 15 minutes time frame, we can see that a person would only enter after they've seen the engulfing candle or this rejection candlestick pattern, or we enter when we see a rejection candle. So a person would enter at around this position, which was up around 11:30 yesterday, and it would close yesterday at night at around 8 p.m. So it was a day trade, but as for me, it was an intraday trade because I took the position at around half 3 in the afternoon, and it had to close uh, yesterday at around the same time, which is 8 p.m. So this is it, guys. This is how I traded. All right, 4 hour, 1 hour, and 30 minutes. Our exponential moving averages were showing an uptrend. If you don't know the strategy I'm using, right, I'm uploading a series of my strategy concepts, right. You can check on the playlist on my YouTube channel, right. I I personally teach the whole strategy, the entry signals, the zones you should be the zones you should be watching, and also the patterns you should be watching. Alright, the trend, the entry zones, the entry patterns, and the entry signals. Right. So this was a super sniper entry because it never went into drawdown this trade. It just started going in the right direction and started going up. So as I told you, as always, I don't take these trades alone. I update my community, right? Where is the buy limit order? Yeah, this one. It was a buy limit order because the price was currently above the price I wanted them to enter. And as you can see, as I told you, I told them to enter on the psychological level. Stop loss was here, take profit was here, and it was all here. 1:3 trade, but I was already currently in a position. So my stop loss was around $44, and my take profit was around $96, somewhere there. Because it was not exactly 1 to 2, it was 1 to 2 point something. And if you subtract the commissions, you can do the math. So today Today we are currently open on GBP JPY, right? So in our 4 hour, 1 hour, 30 minutes, I saw an uptrend. So I delete those indicators so as to reduce noise on the chart. So I just leave the emojis to indicate for me that this is what I saw when I was in the 4 hour, 1 hour, and 30 minutes being provided by the indicators. So guys, it's not like we are always winning. Sometimes we lose, right? But when we look at these ones, for example, on the trade that we took on Tuesday, right? If you look at this zone, you'll see that it is a well-respected zone. If the graph somehow surpasses this zone, then I'm sure that it's not my prediction is not correct. Right? So this is how you take your trades when you taking the take profits and stop losses. My take profits, they are not somehow fixed, but my stop losses, they are below some certain levels. For example, this one, it was below the previous what lower low, right? This one, it was also below the previous lower low. At the same time, on the zone where the price was frequently touching that zone. So this is how I just take my trade. Today's trade, it is the same. Stop loss, it is on the zone where price is frequently touching it, and it is also below the what previous lower low. So on this trade, I just saw that in the 1 hour, right? When I drew a trend line in the 1 hour, right? I saw that it is being respected, the trend line, and also this zone, it is a 1 hour zone which was respected here and here. So when price came and what broke that zone, it came to retest. I knew that this was a what an entry signal because it broke that zone. Right? Previously, it would just touch like for example, it was touched by a wick. There it did not even reach. There it broke. So that's why I was waiting for an entry signal, but I did not want to open two positions at once. So when it broke and came back, I knew that this is my entry signal. By this time, I was not yet on the chart. Otherwise, I would have entered because, as you can see, there is an engulfing candle, a bullish engulfing candle, and also there's a what a pin bar, right? A shooting star candle here. So I then came and took my position here, where there was also a what another engulfing candle, and we can see that there's a what a morning star pattern right here. There's a morning star pattern right here. If you research or if you watch my courses, you can understand what I mean when I say a morning star. So we have three confirmations about trend. We have first of all the market structure. It is forming higher lows and it is forming uh, it is forming higher highs and higher lows, higher highs and higher lows like that. And then the basis of my strategy, the exponential moving average, it is another confirmation on the trend. Then we have the 1 hour trend line. So on the trend, I knew that it is going upward. I always trade with the trend there. There are very few times when I oppose the trend, when I open counter trend trade. Always, I always trade with the trend. So when I saw that my trend is going up and we are in the area of interest, which I call the optimum trading zone, I was now waiting only for an entry signal. When this candle closed bullish engulfing while also creating a morning star, then took my position. And as usual, I did not take it alone. I updated the community here, guys. So you should just join the community. It is for free. Right? When I take losses, you see me show you the screenshots that I took the losses with you. When I take profit, I also show you what the screenshots that we were together in this trade. So this one is a 1:3 because I took it after I had waited. I was patient and I took it where there's a tighter stop loss. So we do not want stop losses. Like yesterday, it was more than 36 pips. Stop losses on my JPY pairs, they are usually 20 to 30 pips. Was less than 20, it means it is very tight, right? The market is very volatile when it comes to this JPY pairs, right? So I just updated them, and let's just wait and see how it goes. On other pairs, I did not want to continue trading this pair because I was done with it, right? On AUD JPY, I saw some confirmations, right? There was an uptrend in the 4 hour, uptrend in the 1 hour, but the 30 minutes slower moving average was still above the faster moving average, which means that it is showing what a downtrend in 30 minutes. Therefore, in the 15 minutes, I cannot end. Mind you, when we are looking for entry signals, the candlestick patterns that we confirm for entry signals, they are not in the 30 minutes, 1 hour, or 4 hour because we are day traders. it it is it is in so few cases, right? It is in very few cases that I take a trade and it takes more than 24 hours. Usually it is 6 to 18 hours and I'm out of the market. That's just how it goes. So here it would be a very nice end, right? Somewhere around here because it broke and retested, but there's no entry signal in the 15 minutes. But maybe if we look in the 5 minutes, we could see an entry signal. Yes, there is an entry signal, bullish engulfing candle plus the morning star. You could have taken this trade, right? And you would have got your profit. But when I was on the charts by that time, the 30 minutes was showing downwards, the 1 hour upwards, 4 hour upwards, of which my strategy is mainly based on this EMA. So I did not enter that trade. I did not enter that trade. And then on GBP USD, the analysis that we had, I saw that it is moving downwards. Right. So I was waiting for it to what? To make. I wasn't on the charts at this time. Otherwise, I should have taken this trade. I was waiting for it to what? To make a move to the downwards, right? On this entry area, on this entry area, or on this entry area. Here I can see that there's a what? A bearish engulfing candle. I could have taken this trade because it is breaking and retesting the psychological zone, which are very well respected. These psychological areas, they are very well respected. So I would have taken it if I was on the charts, but that's how the markets are. You don't capture every move. If you are more zero capture, just make use of them. Just make sure that the fewer the numbers, in fact, sometimes when the numbers are few, let's say most of the times when the numbers of trades are few, most of the time they are getting more profit because they are taking the most accurate trades. So I was saying that in the long run, in the 1 hour, there was a what? A downtrend, and there was a some formation of some kind of a bearish flag right here. You can see it. So I was waiting for it to, what? To come and retest that area, this area, or just the psychological level. Even if it doesn't retest that area, the psychological level, I knew that it was enough. So I just wanted that psychological level to be retested and enter. But I could have entered this trade if I had seen this candle close this bearish. I would have entered, but I wasn't on the chart. Then on gold, our analysis, our analysis we did not take any analysis on gold. So I just trade these 5 pairs. Gold, GBP, USD, GBP, JPY, USD, JPY, and AUD, JPY. I do not need any other pairs. I trade 5 pairs so that at least if I, let's say for example, I traded Odile one pair, yeah, I would end up looking for opportunities where they are not available. But if I trade 5 pairs, at least on 5 pairs, it is rare that you find all the 5 pairs not having opportunities. And if they do not have opportunities, well, I just sit on my hands, go watch a movie, go to school, and maybe play some games and wait for when the what opportunities come. This is with the use of what these alerts. You can set an alert that when price reaches this point, now there is an opportunity, right? So I trade 5 pairs. They are not a lot. They are there to save me as getting more opportunities, right? And if there are more than 5, maybe someone will be very skilled, but taking a few pairs at once is good. And also in terms of market, you cannot trade crypto, metals, commodities, currencies, and like and stocks like many 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 markets at the same time. You should focus on maybe one or two. Mostly you should focus on one. Personally, I focus on the what? On the currency trade, right? And gold is the only commodity I trade. The person should mainly focus on what? On on one market. Gold I trade it because it's easy to understand for me. I get many take profits from gold than I get from these other four pairs. Alright. So this is how it is, guys. I'll be just be updating you. Let me just show you the uh meta trade and the funded next, right? So on the funded next, you can see that on the meta trader, you can see that my profit, my stop loss was 44 and my take profits were 48 and 48. Therefore, making a profit of about $97.56, right? So this is a $10,000 account. It's a what? Funded account. I do not want to risk 1% because I know, as for me, I know that my trading style, through back testing and experience, I know that there is a certain level where I can reach five losses at once, five consecutive losses. It's possible, and that's just the maximum I have once reached. I do not know if it is the maximum that I can do, but I'm just telling you what I once did. So if I can reach five losses at once, all right, why do I need to risk 1%? Because if I risk 1% and I'm now on a losing streak, I lost 5% and the account is said you should not lose more than what 8%. I'm only left with 3% to what to lose my account. So this is why I only risk what 0.5%. By risking 0.5%, my take profit would be 1 to 1.5 because I don't take trades that are less than 1:2. So it is 1% to 1.5%, mostly 1.5% because I usually take trades that are 1.5%, um, 1:3 risk to reward. So taking that taking that in mind, you can see that I will need 16 trades to lose that account. If you are a trader and you lose 16 consecutive times, it shows that you are not you do not have an edge. You are not yet a profitable trade, right? But five losing trades to eight losing trades, that's very possible. But more than 10 losing trades, that's very highly unlikely when you are already what a profitable trade. So if we open on GBP this is how we are. Yeah, this is what we are looking at. There are two positions with a stop loss of $23 each and a take profit of $56 each. So you do the math, guys. This is about 1:3. This is about 1:3. So this is it, guys. Let me just show you on the FundedNext platform. Right. This is it. So I'm only currently about 0.95%. And if we're looking at the system performance, like trading overview analytics, this is what we are looking at. Right. So until next time, guys, peace out.